Hello traders, Gary Wagner here, just about 10 minutes to 11 o'clock here in Honolulu, 10 minutes to 4 o'clock in New York on Friday. Happy Aloha Friday, as we say in the islands. It is the 26th day of February, 2016, and this is the daily report for gold and silver, our weekend review combined with trending markets to take a look at the entire breadth and scope of the markets this week. So gold is under pressure this morning, currently trading off about $9 when we look at spot, about $14 off if we compare it to the net change in COMEX, but the price is the same, $12.23, $12.24 in that area. Now it's traded to a low of $12.11 on the day and a high of $12.40, so we're certainly closer to the low than the high, although we are well off of the lows on the day. So traders, the first thing that I do want to take a look at today, we just talked about gold prices being lower on the day, off about $9, $10 as we have looked at it in its current print. Take a look at the dollar index. We've got that up now, 98.06, up almost a full percentage point, 0.8 of a percentage point. Now that kind of strength in the dollar, when we take a look at the Kitco Gold Index, you can account this $9 drawdown almost predominantly 95% of it due to a strengthening US dollar, with normal selling only accounting for about 70 cents of this $9 drop. So although we are absolutely looking at a drop in the market, we are looking at real dollar strength, and it is this dollar strength that has really moved the market down in terms of gold and put some pressure on a few other markets, crude oil being the other market very sensitive because it also trades in dollars. So traders, absolutely no doubt, an interesting week in the marketplaces themselves. When we take a look at our weekly chart, this will give us an idea of what we saw this week in gold. Here's what is fascinating to me. First of all, we absolutely have a doji, meaning that the open on Monday and the close on Friday were relatively close. You can easily see that when you look at the small body size here. The second thing that is quite apparent when we look at this is dramatic highs and lows. So we had a pretty strong range during the week itself when you consider that it traded almost to a low of 1200. I believe 1202 was the low here, and almost to a high of 1260. I believe the high here was 1253 in that area. So we had a tremendous range on the week itself, and when you consider that it closed in essence unchanged to slightly down, and then take a look at the way that the dollar moved this week, and let's go ahead and pull that weekly chart back up, because what we are seeing is this. Gold really did manage to hold its own. Now it's a dollar sensitive commodity because it is traded in dollars, obviously, but when you consider the fact that we had the US dollar, which really found dramatic support at around 95.34, for the last 2 weeks has moved up strongly. And when you consider the move that we saw this week, to see that it did not have the ability really to drive gold down proportionately, in essence, gold did go up this week when you compare it to other currencies, just not the US dollar. Now, that being said, I still have some genuine concerns about the way gold is reacting when we look at a daily or weekly gold chart. And so this is the weekly chart that I'm speaking of. Obviously, there's two ways we can really look at the last couple of weeks in terms of trade performance on gold. This being the doji that we just spoke about, and this being that kind of hangman that arrived after this protracted and long move up from these bottoms at about 1040 to about 1260. So we've had this dramatic rise in the market, and the question was whether or not these last couple of weeks have given us a kind of correction that would be a normal kind of a pause after this kind of a rally, when we consider where these highs came in and where we found this market finding some sort of resistance. They are logical places. First of all, we can take a look at this area where, call it 1240, was absolutely a support area, a resistance area. Here it breaks through. Here it's a resistance area. Here it's a resistance area. So we do have technical, historical data pointing to why this could be a place we could find some real resistance in the market. We are long. We're long from about 1217. We have stops below 1200, and as I said, the market's trading at around 1222, 1223, but we are getting some kind of top action in here. Now, when I say top heavy, I should say, but when I say top heavy, really what I'm referring to is not the fact that I think that this rally is over, as much as at some point we will see a real correction come into the market. And that correction has really not occurred yet when we consider the kind of move that we saw when we had this tremendous rally. If we plot just a simple 38% retracement, it does take us to a 1200, 1180. So that's the area we might find out. We have a protective stop. That protective stop is just under 1200 right here. And when we consider the action that we saw over this last week, meaning these highs and these lows, my sense is that I am going to look to tighten that stop on Sunday here. Of course, that would be Monday overseas, should we see any kind of a weakness in the market, because we've got a little bit of profits. And my point of putting up a stop right now at 1220 is a moot point until we see how the market opens up next week. Now, when we consider what the U.S. equities markets have done over the last couple of weeks, this is a weekly chart right here, you can absolutely see we've had two solid up weeks in the Dow Jones Industrial Average. U.S. equities as a whole closed off about 60 points, 57 points on the day at 16,639. But the real key can be seen when we take a look at our Standard & Poor's 500. Let's go ahead and pull that one up. And traders, we are taking a look at our daily chart, standard candlestick format. And if you recall from yesterday, we really realized that this move above the 61% retracement at 1938 was significant. As we've said, over the last couple of weeks, we've seen a dramatic rise in the market. And I was looking to actually take a stab and move long in this market today. However, I saw some signs that showed some potential weakness. Now, first of all, on a bullish note, we did close above 1938. No doubt that's bullish, and that might give us the information that we need to actually enter a long position on Monday. But we got this shooting star, and that's what alarmed me. After we reached these highs in the marketplace themselves, and a lot of this happened in the evening part of the S&P 500's trading cycle, because it does trade 24 hours a day on Globex. But we really came off of those highs relatively quick. We went into the body of the prior candle right here, and this would actually almost be an inside trading day or a harami, an inside trading day in which the real body of this candle fits within the body of this candle. However, for it to be a harami, which simply means pregnant in Japanese, you would want to see it more towards the middle of this candle, this green candle here. However, there's absolutely no doubt that we can make a case that what we saw here is a shooting star, because it meets really every straight definition of that market. And that was really the primary reason that kept me from triggering a buy signal and sending out a trade alert today. Now, interestingly enough, in crude oil, we were in essence unchanged on the day. Closed below $33 a barrel at $32.96, off about 11 cents. Nominal move in the marketplace when you consider that we've been having these single digits, but 4, 5, 6, 7, 8% moves up or down in this market. This is in essence an unchanged day. When we look at the monthly chart, though, what we're getting is some interesting scenarios brewing in terms of what we're looking at. Now, we did get these matching lows, and these lows came in just above 25. And if you recall, 25.26 was the point that I believe we would find at least some stability and possibly a bounce. However, if you recall from the shows that we did maybe last month, we were looking at this as a potential dead cat bounce, meaning that we'll get that bounce up, but that's only to be followed by further declines. Not really sure what we'll see, whether we can see oil solidify and form a base in this particular area and begin to move up, or if we'll see it continue to slide to $20 as many people believe. But the easiest way to look at this to me is on a technical basis, because fundamentals are still alluding to lower pricing in crude oil. But on a technical basis, we have this market really finding some sort of support at about $26 per barrel. So traders, lastly, I do want to take a look at silver. We haven't talked about it in a while, and I really want to illustrate why I've kind of left that out of the mix. I think that we really have seen a dramatic move in silver that has uncoupled it from the way that it's trading with gold. Silver under tremendous pressure over the last couple of weeks, especially when you compare it to what we've seen in gold. For example, when we take a look at our weekly chart right here, this of course is gold. We talked about the doji, we talked about the potential hangman, but they're very, very small bodied candles, meaning the relationship between where the market opened on Monday, where it closed on Friday is extremely close. Now, take a look at silver, and let's go ahead and pull that up. Silver was off about almost or over 2.5%, 2.77% on the day, off 41 cents, trading at 14.72. And the tell of the tape really is when we look at our weekly candle. Now, consider the gold chart that we just pulled up, in which we had a doji this week and a very, very small bodied candle last week. Now, compare that to what we're looking at in silver. This is our weekly chart of silver. You absolutely have some dramatic declines that came in at 1570. We hit this level of resistance, and the market just really plunged. Look at the move that we saw this week, trading to a high of what, about 1560 in the market to 1470. So a tremendous range on the day. And I don't really see any real support in this market till about 1450. Then we'll take a look at it, but you can see it's been under dramatic pressure, and that's the reason we have kept it out of the mix over the last couple of weeks. This has been Gary Wagner, wishing you as always good trading. We'll talk to you on Monday for another daily update review. Maintain your current long position in gold, but be sensitive to any price movements that we see as it opens on Sunday. We are still looking at a long move in the Standard & Poor's 500 vis-a-vis the E-mini. We have sustained 2 weeks of good, strong moves to the upside. It's just this daily sell-off that had me a little bit concerned. I'd rather not have the exposure over the weekend and take a stab at it on Monday should all the cards kind of line up. Have a great weekend. Bye-bye.